my mind goes to, okay, I'm working, I'm saving for retirement, I'm trying to figure, I want to make sure that all of this hard work and savings, doesn't ultimately get eroded by inflation. So talk about that and maybe some tools that people can think about and use to offset the impact of inflation.
Sure. And that's obviously a very common topic in my world. And how do we invest and protect your purchasing power over time? I don't know if a lot of people know this, but stocks are actually the best hedge against inflation over the longer term in terms of growing your savings and outpacing inflation. Stocks have repeatedly been the best solution. Now, the knee-jerk reaction is I want to own commodities, oil. And yes, there's been spikes in commodities whenever we have had a turn higher in inflation, but it's usually short-lived. So when you think about a longer-term 5-year, 10-year, 15-year plus horizon, which really that's what you should be thinking of in terms of retirement, then stocks have outperformed commodities. And that's really where the focus should be. If you own bonds, that's more problematic because interest rates are still low, even though they've come up, and inflation is going to erode the purchasing power of those bonds. So it is a balance. Bonds still work to protect on the downside, but you really do have to work and think about what's the right mix of bonds versus stocks. And for some clients, the answer is to increase stocks to weather that inflation over time. So from an investor standpoint, thinking longer term, it errs to the side of making sure you have enough or even maybe more stocks, despite ongoing market volatility over the longer term. That's the best way to hedge against inflation.
Yeah, it's really interesting. So, I guess you would, I'm sure, tell folks that you speak with, your clients and others, speak to your investment advisor, have these discussions. It's truth is we haven't thought about inflation for 40 years, in any real sense.
That's right.
Yeah.
No, this is the biggest shock since then in 40 years. So yes, do talk to your financial advisor and see how your portfolio is positioned and what you could do.
So Anthony, I guess the question is, how much sleep should I lose thinking about inflation and retirement, and frame this, if you would, if I was 30, 40, 50, and 60?
Yeah, no, good question. And my reaction would be don't lose any sleep over it. There are things you can do to manage it. And there's also benefits that I think people, well, not necessarily benefits, but there's some other aspects to take into account. If you're young, you start saving and know that you have that really long horizon, 10, 20, 30, 40 years to let that savings grow in the stock market and outpace inflation, which stocks have done over the longer term. There are periods they don't, but over the longer term, very consistent outperformance relative to inflation. If you're in your 50s, keep doing that. Keep staying in stocks. Stay invested. Be noteful of the amount you have in bonds currently. If you need to save more to help give yourself a buffer. That's a bit more of a financial planning discussion you can have with an advisor to see if your savings and future inflation might erode that. But yeah, for the most part, keep doing what you're doing, save more if you need to, but really make sure you've got your investment portfolio built to weather that inflation. The other factors I think people maybe don't know as much is your home. If you own a home, that is a good inherent hedge against inflation. You've seen home values rise. And the other part is interest rates are still low. So while costs of some things have gone up, interest rates still make buying many other things relatively affordable.